Welcome back to the deep dive. Today, we're going to unpack the Haven Equity Travel, Leisure, and Tourism Fund. Our mission really is to look at this strategy and especially the benefits for you, the investor, particularly if you're looking at the Golden Visa route.
Absolutely. And the timing here is, well, it's pretty electric. The backdrop for Portugal's tourism sector isn't just good, it's based on some staggering numbers recently.
Staggering how?
Well, in 2023, tourism didn't just recover, it smashed previous records. We're talking 77 million overnight stays and generating $6 billion in profit.
Wow, $6 billion. That's serious money.
It really is. And the projections show the sector growing to represent maybe 20% of the entire national economy.
Okay, 20%. So when you see that kind of government priority on tourism and that forecast of, what, almost $31 billion in spending from international tourists, that points towards stability, right?
Definitely stability, but it also raises the question, okay, Portugal's booming, but how does this specific fund, Haven Equity, plan to capture a slice of that? It's a big country.
Right. Let's drill down into that investment thesis then. They talk about a capitals fund concept, which means focusing geographically.
Exactly. Just 5 specific regions: Lisbon, Oporto, the Algarve, which they call the tourism capital, and, fairly so, Madeira, specifically Funchal, and the Azores, Ponta Delgada.
Okay, Lisbon, Oporto, Algarve, Madeira, Azores. High-profile areas. But isn't concentrating like that a bit like putting all your eggs in, maybe, very competitive basket?
That's the strategy, though. Target the areas with the highest density of visitor spending, the best infrastructure already in place. But the real differentiator, I think, is the type of asset. The fund invests in companies using the Editory Collection concept. That's from the Sonet Group.
The Editory Collection, what's unique about that?
It's about moving away from standardized hotels. They focus on restoring historical heritage sites and really weaving the local culture, the essence of the place, into the guest experience. A self-curated style, as they call it.
Historical restoration. That sounds, well, ambitious. And potentially costly compared to a standard new build. How does that complexity balance out?
Well, the bet is that today's high-end traveler wants immersion, something unique, not just a generic room. That kind of curated, culturally rich stay, it commands a premium rate. So the idea is it drives higher returns, offsetting the upkeep costs of heritage buildings. It adds long-term value.
Okay, so the concept aims for premium asset value. Let's shift to the fund structure itself. How does that protect the investor?
It's a private equity close-end fund, right?
Precisely. Close end means the capital pool is fixed, deployed over a set time. That avoids the liquidity headaches you sometimes get with open-ended funds. And crucially, it's registered with the CMVM.
The Portuguese regulator?
Yes, the Securities Market Commission. And it's managed by Magnify Capital Partners. These guys have serious international experience, managing over $1.3 billion in private equity.
Okay, solid management, regulated structure. What about the direct financial benefits for someone investing? They're quite attractive. First off, a 0% subscription fee. Always nice to see. And it's set up for international investors. It's USA FATSA compliant and, importantly for U.S. listeners, PFIC ready.
PFIC ready, that simplifies U.S. tax reporting, which can be a real hurdle.
It absolutely does. Plus, there's a cash flow aspect. You get quarterly returns paid out at 2% per year, calculated from when you subscribe. That gets adjusted later at divestment to reflect the full return, but it provides some predictable income along the way.
Okay, that makes sense. Now, let's pivot to what seems like a really key piece, the Golden Visa connection, the ARI process in Portugal. This fund seems to have some unique features there.
It really does. This is quite specific. For Golden Visa investors, the fund offers a kind of contractual safety net. It uses an automatic buyback put option.
Okay, break that down. A put option means?
It means the fund is contractually obligated to buy back your investment, your shares, at an agreed point. Specifically, when your ARI process, your Golden Visa journey, successfully concludes. So it essentially builds in a guaranteed exit mechanism, taking that liquidation risk off your shoulders.
A guaranteed exit linked to getting residency. That's a huge draw, I imagine. But there's more, right? A kind of lifestyle perk.
Yes, it's a nice dual benefit. Alongside that investment security, you get 7 complimentary days per year. You can use them at any of the Editory Collection hotels, so you get to actually enjoy the assets you're invested in.
Nice touch. What if someone needs liquidity before the whole visa process is finished?
That's addressed too. Magnify can provide support for liquidity even before the official end of the ARI program, if needed. There's flexibility built in.
So wrapping this up to the listener, what you seem to have here is a combination. You're investing in a sector, Portuguese tourism, that's clearly got high growth momentum, And you're doing it through a fund with specific structural features like that buyback option and perks really tailored to Golden Visa applicants.
Exactly. And maybe the final thought to leave you with, connect this to the big picture. You have a massive projected spending by international tourists, continued government focus. So how might this very focused Capitals Fund strategy, betting on unique, restored, culturally rich properties instead of just volume, how might that shape the future of luxury hospitality in Portugal's key regions over the next decade? It's a sophisticated bet, really. A bet on quality,